Canadian. This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on June 28, 2018. Our time is 8:10 a.m. in the morning Mountain Time. Canada Day long weekend coming up. Canada Day on Sunday. That means a holiday on Monday. The 4th of July is coming up in the United States on Wednesday. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. U.S. dollar this morning at 95.33. Canadian dollar 75.27. Gold at 12.51.30. Silver 15.99. Gold-silver ratio 78. Platinum 847, palladium 940. WTI is at 72.73, Brent 77.65, nat gas is 301. Bitcoin in US dollars is 6,097.28, Bitcoin in Canadian 8106.28. The Dow is at 24,018, the S&P 2701, Nasdaq 74.28, the TSX 16,231. And one of the breaking stories this morning as we tape our podcast, Donald Trump is going to meet Putin. They're having a summit in Helsinki, July the 16th. So first he meets with the leader of North Korea. Now he's meeting with Putin in Helsinki coming up in the middle of the month of July. Harold, Donald Trump, whether people like it or not, and we do have this information in our free weekly newsletter more as just an information source, the majority of Americans approve of Trump's handling of the economy for the first time. According to a CNBC survey, Trump's economic approval rating surged 6 points to 51%. So it is interesting. You were saying to me prior to the podcast, you're not quite feeling what's happening in the United States economy-wise.
No, there's still a lot of people suffering. The jobs numbers are way up, but not great jobs. So it's not that people are spending a lot of money right now. Things are better than they were prior. His approval rating is going up. We all know he's a bully, but he does seem to be getting some things through. So again, his popularity is going up. It's going to be interesting to see, what happens when he comes up for re-election, because there's still a lot of controversy around him, and, we'll have to see what's going to happen. But all in all, the markets are responding during the summer the way that we anticipated, because they're fairly lightly traded. So gold is down to $1,250. So there is some support in gold at $1,250. There's much stronger support around the $1,235 level. Number one is because the U.S. dollar is stronger. And that's something we've talked about for years, is that when the U.S. dollar is strong, gold's going to sell off. But there are still situations out there, that can cause gold to rally. The fact is there's still a lot of people out there that believe that the problems that are present not only in the United States but around the world are going to be very good for gold. One of the reasons that we're seeing interest rates rising at this particular point is primarily because there's inflation coming. So when there is inflation, the way to combat that is primarily to raise their currency. So by having a stronger currency, when prices are going up for food and gas and things like that, at least your currency is getting stronger. But a stronger U.S. dollar, and by raising interest rates, is really going to cripple the country and the world eventually due to the fact that there's so much debt out there. So that's the number one problem. The biggest thing that analysts look at is the tremendous amount of debt, the amount of money owed. And when you're raising interest rates, obviously, to carry that debt is going to be much more expensive. So the fact is that if we are going to raise interest rates another 2 or 3 times here in the States, and it could possibly go to 4%, 5%, that may not sound like a lot, but it wasn't that long ago that interest rates were at zero. And at zero, again, the debt was easier to carry. Now that we're over 3% and heading towards 5%, it's going to be a real problem. It's very similar to what happened in Canada when the debt level was extremely high amongst citizens, and then Canada was raising interest rates. It hurt the real estate market, and it hurts the citizens because, again, most people budget themselves. They make enough money to be able to pay their bills, put away a little bit of something for retirement, if they're lucky. But when interest rates are going up like this and it costs more to carry your credit card and your household debt, it's going to be an issue. And that's exactly what's going on at this time.
Interesting to note, we talked about this last week, and Harold touched on it now. The CBO, Congressional Budget Office in the United States, warns U.S. interest costs to match Social Security spending by 2048. So the U.S. government, and granted it's a ways down the road, but if they do not deal with these problems, they're going to hit the wall in a major way. The U.S. government is on track to pay creditors as much as retirees in 3 decades amid growing public debt and rising interest rates. The CBO said Tuesday, the CBO projects net interest payments will exceed discretionary spending by 2045 and by 2048 match Social Security outlays of 6.3% of gross domestic product. Now, Social Security is currently the U.S.'s largest federal program. So you can see at some point you will hit the wall. And will they peel back the benefits over time? We'll have to wait and see. The other thing that we had touched on past podcasts, people are getting very concerned about the stock market. Hedge fund managers see echo of past crashes in the market. The ranks of hedge fund managers expecting impending market chaos is growing. Greg Coffey, he's the former star manager of More Capital Management, who started his own firm this year, is comparing the turmoil in May to the end of the dot-com bubble in 2000. Horseman Capital Management's Russell Clark, one of the most bearish hedge fund managers in Europe, invoked memories of the financial crisis of 2008 in a letter to clients. And it goes on from there, where there are other top people like George Soros, who's warned of a looming financial crisis. Also, Crispin Odey has for years expected a market crash. Now, he's lost money betting on it, but he says the ghosts of 2000 are upon us. David Rosenberg from Gluskin Sheff out of Toronto sees a U.S. recession in 12 months and says the S&P 500 has peaked. And Harold, you have warned us about China for a long time, and this story should scare the you-know-what out of anybody. China think tank warns of potential financial panic in a leaked note, and they're talking about China. A leaked report from a Chinese government-backed think tank has warned of a potential financial panic in the world's second largest economy, a sign that some members of the nation's political elite are growing concerned as market turbulence and trade tensions increase. Bond defaults, liquidity shortages, and a recent plunge in financial markets pose particular dangers at a time of rising U.S. interest rates and a trade spat with Washington, according to a study by the National Institute for Finance and Development that was seen by Bloomberg and confirmed by NIFD. The think tank warned that leverage purchases of shares have reached record levels, last seen in 2015 when a market crash erased $5 trillion of value. We think China is currently very likely to see a financial panic, the NIFD said in a study which appeared briefly on the internet on Monday before being removed. Surprise, surprise. Preventing its occurrence and spread should be the top priority for our financial and macroeconomic regulators over the next few years. The study provides another indicator that China is growing concern about the knock-on effects of trade tensions with the United States. And I guess they are very concerned over in China with the trade war because it seems to be leaking out that they don't think they can win a trade war or it will do substantial damage to China. But Harold, interesting to note, you've always said China is something that we need to watch out for. China think tank warns of potential financial panic in a leaked note.
You know, the thing is that obviously we don't get the right information all the time out of China. So you really have to dig in order to find it. They're a communist country. So basically, you know, they're going to tell us what they want us to know. But there's no doubt that a trade war with the largest economy in the world would be detrimental to them moving forward. And, you know, you've got a situation to where if the U.S. is in trouble and they are to a certain extent, it's going to affect China because we're probably one of their biggest customers. On top of that, China is the biggest buyer of our debt. So one of my biggest concerns obviously was, and still is, if we are going to enter a trade war with China, what is China going to do to retaliate? And one of the things that they will do, there's no doubt about it, is stop buying our debt. And by stop buying our bonds and our debt and possibly liquidating the bonds that they're already holding, and they are the largest buyer of our bonds on earth, that's going to hurt us at a time when we really can't afford to be hurt. So again, the one thing about Trump, it's not that I disagree with the way that he's looking at things on a business-to-business basis. It's just the way that he does it and the enemies that he creates. You know, the United States is sandwiched in between Canada and Mexico, and he's fighting with both countries. It makes no sense. We've been friendly with the United States, forever. And now you're fighting with China and possibly with Korea and possibly with Russia. So where is this going to end? And there's a lot of people nervous that if the situation gets dire enough, that it could cause a war again. So we do have some serious issues. Not that Trump is not, the way that he's looking at things, it's not incorrect. There's no doubt that, some of the things that he is doing is proper. It's just the way that he actually does it, that he's offending, he's creating enemies, and that's not the way business works. The one thing about when we looked at the elections, I always felt that a very strong businessman would do well to run the country. But the fact is that you still need the couth of a politician. And it just appears that Trump doesn't have both. He's got the business acumen, but he doesn't have the couth. I always thought that Mitt Romney would have done an excellent job because he's a classy guy that's, self-made billionaire. He just ran a terrible campaign and didn't get in. But, Trump has got to tone it down a bit and stop creating enemies, and he could actually end up doing, a very strong job. But he's creating enemies, and at a time when there's nervousness in the market, it's not a good scenario.
Connect with Harold. Learn more about investing in hard assets. 1-800-432-1022. His website, rarecoloreddiamonds.com. It was interesting to note this week, negative debt pile swells to $1 trillion. Negative debt is obviously something we've talked about for years on our radio show and podcast. Just imagine buying a bond, investing in a bond, and you're getting paid nothing. You're paying them. Isn't that strange? Bond investors are looking pretty pessimistic on growth. As the U.S. and China move closer to a trade war and the European Central Bank prolongs stimulative rates, traders are piling into the safety of government debt and enlarging the stock of bonds with below zero yields. In just 6 days through Tuesday, the world's pile of negative yielding debt surged almost $1 trillion to $8.1 trillion, according to data compiled by Bloomberg. The falling yields are a signal that investors think the economy, the global economy, will be unable to muster significant increases in inflation or output. And the ECB President Mario Draghi last week said policymakers expect to keep rates at their present levels at least through the summer of 2019, and in any case for as long as necessary to meet inflation targets. Now, they were going to be pulling back on their quantitative easing. Here in Canada, they actually, Pelosi gave a speech here this week and said that the next rate increase would be based on what's happening with the trade war with the United States. But Harold, think about it. Here we have negative yields, $8.1 trillion worth of bonds out there. At some point, people will not want to hang on to those bonds. And what will happen then?
Well, that's what we've been saying for all this time. When China decides to liquidate those bonds, don't you think that it's going to devastate the market if they are the largest holder of our debt and our bonds? So it's a very dangerous scenario. And that's, again, where the tact comes in, where you have to be able to negotiate and not offend China, because China could do us some serious damage. And I find it impossible to believe that Trump doesn't see that. I mean, how in the world do you start a trade war with China and then expect them not to retaliate? So again, I agree 100% that what's facing us, right in front of us could be substantial. And don't forget, these type of scenarios, when they do happen back in 2008, a lot of people didn't see that mortgage crisis hitting. We did for, funny reasons, because of my son being in college and giving me information on his friends that were buying with these liar's loans type of things. But the fact is that most people never saw that coming. And when it did come, it was devastating, because not only did it put several companies out of business, not only real estate type companies, but companies like insurance companies and car companies and banks, because nobody saw it happening. And I'm not sure that they are so blinded by the fact that the stock market is hitting records type of thing. The stock market in the United States has not pulled back since 2008, when the market went from 14,000 to 6,500, and now we're almost at 25,000. It's just unconscionable to think that market is not going to correct. And there are situations out there that are so dangerous, like the derivatives market, like the debt market, like a potential war, a financial war with China, and possibly Russia, and possibly other European nations, and the fighting with Canada, and the fighting with Mexico. I mean, where is this going to? If the United States thinks, or if Donald Trump thinks, that he could just stand on his own without any help or any friendship or any partnerships from any other country or any other leaders, he's delusional. Because there's no way in the world that you can continue to do business in this world when you're pissing everybody off. So that's exactly what he's doing. And again, where I agree with some of the points that he's making, I do not agree with the way that he's getting it done. And to create enemies is only going to mean that these enemies are going to band together against the United States, and then it's really going to be a tough situation. So I wish that he would take a step back, stop being such a bully, and understand that there's some type of tact that has to go with these negotiations. You just don't go in there like a bully and beat everybody up just because you're the head of the United States and the free world type of thing. So I do agree. There are situations on the horizon that can catch us by surprise. And when do they normally happen? Right after the summer, when everybody's guard is down. So yes, there's a lot of problems out there. There are situations that could really hurt the markets in a huge way. And again, we haven't seen a correction since 2009 type of thing. So we're definitely due. And with the high amount of debt and the problems that he's creating, it could be a substantial one. And again, most people only look at the market on a greed basis type of thing. What they're looking at is the fact that, oh my God, my 401k has gone back up. I've recovered a bunch of the money or all the money, or I'm now in profits from, when I lost back in 2008 and 9. But the fact is, it could happen again, and it could happen tomorrow. So I would, if I was heavy in the stock market, which I am not, I don't have a penny in it, but if I did, I would never trade that market without having protective stops in the market. Because once that market starts to fall, you're never going to catch it. And what happened in 2008 and 9, that when the market went from 14,000 to 6,500, it happened so quickly that most people never got out of the market, or they were forced out of the market because they were leveraged and they had margin calls. And the general public basically got wiped out in that move and never really got to get back into the market until it got high again. So who can really afford to buy Amazon and Google and all these high-priced stocks, Apple and all that? The general public can't buy it. It's only the hedge funds that buy it. And the hedge funds can trade on a shorter-term basis. So I would be very, very cautious at this time. There's so many situations out there that could really wreak havoc on the markets. And if you have profits in that market, you never get hurt by taking a profit. Don't get greedy. Make certain that you put stop losses or something like that in your position to protect what you have.
Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Learn about investing in hard assets. And if you take a look at things, gold and silver, really one of the most undervalued assets on the planet right now. And Harold has always told us that over the long term, oil will be a winner as an investment. And that was probably one of Harold's best calls when we were doing the radio show in the beginning at about, I guess it was 2002. Oil was around $18 to $20, and Harold's prediction, it would go up to 50, and then eventually 100, and then 150. It went all the way to 140, and that was a great call. The thing that I find very perplexing, there are a lot of people who seem to believe that we're not going to need oil anymore. And I grew up in British Columbia. It seems like there are a lot of people in BC, the politicians, and there's a chunk of the citizenry as well who believe that, no, we're not going to need oil. We don't need pipelines, and we don't need oil. Well, that is not the case. As you order your Amazon products and have them delivered, how do you think the trucks run? But anyway, oil discoveries, and this is from our chart of the week in our free weekly newsletter. You can get it from Harold. Oil discoveries recover, but still far from replacing output. After hitting rock bottom in the past 2 years, global oil and nat gas exploration is picking up again. But it's still far from replacing what's being produced. And production companies are likely to drill 3% more offshore exploration wells this year and boost the number by about another 8% in 2019, after activity dropped every year since 2011, according to the Oslo-based consultant group Rystad Energy AS. The amount of oil and gas discovered in 2018 is on track to rise by about 20% compared with last year, which was the worst since at least the late 1940s. The forecasts show how crude's resurgence is giving oil companies the firepower to start investing. Exploration spending was one of the first expenses to be chopped during the industry rout, resulting in newly discovered volumes of so-called conventional oil and gas falling to the lowest on record in 2017. Still, new finds won't be enough, and this is the important part, to alleviate concerns of a supply shortage by the middle of the next decade. Even if explorers were to discover about 10 billion barrels of oil and gas this year, they would only replace about 21% of the volumes that will be globally produced, up from 18% last year. And according to Niels Henrik Bjornstrom, a product portfolio manager at Rystad, it's not a strong recovery, he said on a telephone interview. It's rather that the trend has turned. And Harold, yes, I'm not stupid enough to not know that things will change. Solar panels, and we'll have vehicles that you can drive in and charge them up, electric or battery. There'll be other discoveries out there over time. But to think that we won't need oil, to me, is so silly. And the truth of the matter is we will need oil. And those that are looking to invest in oil, it's probably at some point a good opportunity, because let's face it, as we just heard in this story from Bloomberg, and you can see it in our free weekly newsletter, Chart of the Week, oil, the oil that's out there, it's not replacing what's currently needed. And that says to me higher prices in the future.
OPEC isn't stupid, nor is Saudi Arabia or the major oil producing nations type of thing. So, the fact is that the amount of electric cars on the market is minuscule compared to gas, driven cars type of thing. So I really don't believe in our lifetime, Randy, that we're going to see that change over to where almost all the cars on the road are going to be electric. They still have their issues. The fact is you cannot go on a long trip without finding a port where you can plug in for 20 minutes to a half an hour. Who's going to do that? I mean, there are some beautiful electric cars out there, obviously, and they're making tremendous inroads, but I do not believe in our lifetime that we're going to see where electric cars will overtake gas-driven cars type of thing. So I agree with you 100%. But over time, just like with the cashless society, certain things have got to phase out. In a cashless society, you have to re-educate people, and people that are in their 60s and 70s and 80s are not going to grasp that easily. The banking, they've always been, myself included, always been cash driven or deposit your money in the bank or deal in that type of way. But, with a cashless society, until everybody is re-educated and you've got the millennials that, are between 18 and 35, when we get most of the people that are within that age group, really learning how to use cryptocurrencies or Apple Pay or Google Pay or that type of thing, the full transition won't happen. Now, in a large sense, even in the United States, a lot of people, especially the younger people, do not use cash. But us that are in our 40s, 50s, 60s, 70s, we will always use cash. So, again, there's got to be a re-education, and there's got to be people have got to phase themselves out, basically, before that can actually happen. So there's going to be changes, but it's going to be gradual. And again, it's not going to happen overnight. And I don't believe that we'll see that transition from electric cars and eliminating gas-driven cars within our lifetime.
If you want to watch a good documentary, and it's probably about 15 years old now, it's Who Killed the Electric Car? And there was an electric car in California that people really loved, and it got killed. And you can watch it and figure out who killed it for yourself, but it's a great documentary I highly recommend. We're towards the end of our podcast, and one of the fun things that we found this week, of course, the latest Star Wars movie is about Han Solo, his early years. Han Solo's blaster from the 1983 Return of the Jedi has sold for $550,000 at a Las Vegas auction. Julian's Auction says Ripley's Believe It or Not bought the item Saturday. The sci-fi weapon was the top-selling item at the Hollywood Legends auction. One other thing of note, and this was big news here in Canada, down in Los Angeles, the CAA offices and CAA agents for Hollywood stars and sports people as well. And John Tavares, his contract is up with the New York Islanders. He is a free agent, and the free agent day is Canada Day, Harold. So on July 1, Sunday, that's when teams can start signing free agents. Tavares is one of the top players in the game, expected to get maybe 12, 13, 14, hell, even $15 million. He invited 6 teams to be a part of it. Now, I hope he stays in the East. We as an Oiler fan, we don't want him in the West. Stay down East. But one of the teams that he spoke with, Harold, was Toronto. And in some ways, I'd love to see Toronto get John Tavares. He did speak as well with his own home team, the Islanders. He did speak with the Tampa Bay Lightning, the Boston Bruins, Dallas, and the Sharks. Now, what scares the you-know-what out of me as an Oiler fan, please don't go to the Sharks. But anyway, the two different sports networks, TSN and Sportsnet, have had people standing outside CAA in Los Angeles as the different hockey teams have come in to present. And usually it takes about 2 hours to make a presentation to Tavares and his agents. But Harold, this will come down here in the next few days. We will know where John Tavares is going. Selfishly, for your sake, I would love to see him go to Toronto.
So would I. What we really need is we need to take hockey back. It's been so long since a Canadian team has won, and we need to be in contention again. So, again, I would be happy, obviously, growing up in Toronto and being always a Toronto Maple Leafs fan, but I'm a fan of hockey, and I'm a fan of Canadian hockey. And the fact is that I would love to see a Canadian team win the Stanley Cup again and start to see some dominance. So, yes, I understand your thinking, and I love the fact that, you would love to, if he doesn't go, that he could go to a team like Toronto. We just need to take hockey back. And I'm hoping that Toronto is going to be the team out east that can do it. And again, with Connor McDavid, we certainly have a chance with Edmonton. So let's just hope it's a great year again this year. And the results are that, a Canadian team does well.
John, hey, if you're listening, haven't made up your mind yet, don't go to the Sharks. Go down east to Toronto. I think that would be a great place for him. Think about it. Austin Matthews, Tavares, also Mitch Marner, they have a lot of good players, so they would have one heck of a team. Harold, Canada Day on Sunday, 4th of July on Wednesday. We wish all the people who listen to our podcast, Canadian and American, all the best. And any final thoughts?
Yes, I just want to say be very, very cautious with these markets. If you're in the stock market at this point, be very, very careful and use protective stops. There's nothing wrong if you get stopped out with a profit. You're never going to get that hurt that way. I'd like to wish my beautiful wife, Harriet, a very happy birthday today. And I'd like to wish everybody a wonderful weekend and a very profitable day.
Thank you very much, Harold. Yes, happy birthday to Harriet and Mr. AJ, who we heard from in the last podcast. It's his birthday on the 4th of July, so happy birthday to AJ as well, Harold's grandson. That's it, another edition of the World Financial Report podcast with Harold Siegel and me, Randy Marshall. Have a great Canada Day and 4th of July. We will talk to you